All right, so like we usually do, we want to check to see what happened around the world. Any news from the European market, which is still open, and any perspective on the Asian markets, which have already closed. A good place for that. Financial juice. It's kind of a 2-for-1 because while you're there, you can also see who is scheduled to speak today. So it gives a little bit of a heads up. This doesn't cover everybody. Obviously, they can decide on their own to have a speaking engagement just pop up on one of the networks. But for the most part, that will cover it. There's been a lot going on with the European bond market. And there's a really big decision today on their end, not just the FOMC for us. We've got our own problems, but they've got a big one. And I believe they've got people speaking. You can see European Central Bank here, 8 and 8:15. Now these times are in my time. They're in my time zone. So you'd have to call it 9 and 9:15. The European market wrap would give you a little more insight onto the things to expect today from the European Union. But as you can see, we've got a full house of our own. 8:15, 8:30, 10 o'clock, 10:30, 2 o'clock, 2:30, 4 o'clock. Now, the FOMC announcement is where they put out the statement and the algos basically trade the headlines. 2:30 is where he comes out chipping his teeth. So don't get caught on that first blush, right? If it turns positive at 2 o'clock and starts going to the upside, don't think that that's going to stick for the rest of the day. It could. I'm not saying that it can't, but the horse ain't out of the barn yet, right? So just because we start picking a direction at 2 doesn't mean it may not turn back the other way at 2:30 or at some other point once homeboy opens his mouth. There really isn't a whole lot to anticipate today before he talks. We're expecting a sideways day. We're expecting to maintain inside the range of yesterday without a whole lot of nothing going on until he comes out and talks. These make for great broken wing butterfly plays or wide iron condor plays. And speaking of any one of those plays, when it comes to a day like today, where you could have a significant move in either direction, a strangle or a straddle is a really simple play, right? You buy a call and you buy a put at the same strike. And if the market moves far enough in one direction or another, you win. As simple as that sounds, the market really does need to make a pretty significant move for that play to work. So obviously there's no free lunch. If you just think you're going to go out and buy a call and a put and it's going to work and everything is A-OK, not so much, right? There is a phrase when it comes to options called the break even. You really want to understand where that line is and what you are asking out of the market. Because if it has an unrealistic break even, you can't reach it, you're just going to lose. This is the weekly expected move. It's a daily chart. One of the trades that I'm putting on today is a butterfly at 40.13, way up here. Why? Because I can probably fill that for $0 or maybe 5 pennies. And if it doesn't work, I'm going to lose 5 pennies. I don't care. But the SPX has a habit of pinning to one of these lines way more than it statistically should on a day-to-day and a week-to-week. Go back and see how many times, just like that, where we pinned almost exactly on that line. So I'm putting one there today. 5 pennies. If I lose, I'm going to lose my $5. Oh my goodness. Depending on the cost, I may put another one right there, right in the middle. That is where we closed Friday. It's not as good as this one way up here, but if I can fill it for 5 pennies or maybe even fill it for $0, I will do that. Another idea that I was thinking about yesterday, which would be a little weird, is to put an iron condor right there. The only thing that I don't like about it is that the 3900 strike part of that condor would be in the money, but it's the SPX. I wouldn't be doing it on the ES, I'd be doing it on the SPX. And so in the money options in the SPX do not become assignment risk for shares of stock because there is no stock to the SPX. It's a cash product. Just some ideas out there. As for doing something like a credit spread, um, you wouldn't get much credit and you would still have to be pretty close. But if you do a broken wing butterfly, you could get a lot farther away and then put on the credit spread, right? It's basically a butterfly with a credit spread built into it. You're not going to get very much for it, but you'd at least be able to get far enough away. All right, the lines on the screen represent the 21-day ADR. ADR is average daily range. In orange, this represents the ADR starting in the middle. So starting at where we closed, if we went up half of the ADR or if we went down half of the ADR, the entirety of the ADR is right there. But if we look at that ADR from where we closed and we measure up 2.69 or down 2.69, those orange lines represent that. So a normal move today to the upside after the report, I'm sure, because I'm very likely not going to see any movement before then of such caliber. 38.45 to the upside, 36.42 to the downside. Those would be normal. If we're looking for something beyond the norm, then we would want to take that number and at least put another 50% on it, if not 100%. Easiest way to do that, visually speaking, is just mark a line between the orange and the red. And then take that line and set it up one stage more. That would give you a base case for what extreme would look like. Just remember what part of the day it is that we're going to see that base case actually start to kick in. Because if everybody is waiting today for Powell and we just range sideways, when we do go to make the move, the ADR of the day, and it's 2:45 or 3 o'clock in the afternoon, we basically have a 90-minute window to make that kind of move. It would be a very extreme move. There has been a lot of talk of the Fed bringing in a 75-point rate hike. Now, they already said, trust us, trust our word. We are going to tell you in advance what we're going to do, and then we're going to stick with what we tell you. They said 50. We're expecting 50. But somewhere in the last 2 weeks, everybody started to bring in this notion that the Fed may shock and awe us. Yeah, maybe. They definitely have the right to. They have the power to do that. But I don't think they got the stomach for it. If they do, well, there really isn't no way to put it that way. Good or bad, just like in earnings, they can present the worst news to us, and if they do it in the right way, this market's going to go up. And they could present the worst news. I mean, just literally, they could say the worst things, but if they say it right, the market could go up. And even if it's really good news, if they don't present it well, even really good news, we're likely to see the market go down, which literally leaves all of us just stuck, unable to really anticipate ahead of time where we think the market's going to go beyond a coin toss. And I mean, you can always gamble. They call this speculating for a reason. You can guess or assume or think and put the play on. And if you can do it cheaply enough, hedge your bets and trade both sides. But other than that, there really is no way to garner where this thing is going to go. But what we can start to do, and it's what I recommend, is focus on the ADR. Focus on the range and the moves at any one moment in time, at all times. Any market, anywhere, has a measured move. A 15-minute chart has a measured move, a daily chart, a 1-minute chart, a 30-second chart. It doesn't matter. Every market out there has an expected move. It's like a bubble around a price. So as we get into the later part of the day and he gets ready to talk, look at the expected move for the end of the day, for that period in time. How much time is left on the day? What is the expected move at that moment for the end of the day? And that will give you a really good starting place. For the 75-point rate hike, it's been a lot of rumor and innuendo, except there was a post, there was a leak, supposedly, or maybe leak isn't the right word. There was where was I? I shared the link. Of course, now I can't find it. There was some kind of rumor or innuendo that we were going to get that 75, and it happened on Monday, and Bloomberg picked it up and started talking it. So it's not a calculation that makes them think that it's going to be a 75. It's because the Fed says 50, we think it's going to be 50. Now, once we start talking about what they're already pricing in, that's right. That's a completely different thing. What they're pricing in. And I don't have the forum in a 30-minute window in a morning briefing to get you that far. I would say look at the Fed fund rate, right? Look at the economic indicators on Thinkorswim and go to the ticker tape, which is published by TD Ameritrade, because they've got really good articles and it'll walk you through it. Because I don't have enough bandwidth in a 30-minute window of a morning briefing to explain that one. Of course, you could always go get your college degree in economics, but it isn't worth it. All right, so we are outside the expected move. We are sitting inside of yesterday's candle. This gives us an inside day. When he reports today, we're looking for an inside day breakout. Should we break out to the upside, that really big candle from Monday is going to be the target and the levels that we want to focus on. When we're mapping out the 5 by 5, there is an untouched point of control from Friday sitting way up yonder. It is really close to the Friday close. There is a big gap between where we closed Friday and where we opened Sunday. Should things get crazy bullish to the upside, I'm kind of looking at that Sunday open for a nice target. That'd be 38.80. We could get to 39. We could, but I just don't see it. Right. And that's kind of the whole point. I don't see it, which is why a 5-penny butterfly sitting at 39 um, it's nice because, I mean, if you can widen that butterfly out 30 points on each side and still get it filled for 5 pennies, that's a gigantic butterfly basically for free, right? And it's no different than a lottery ticket. So, kind of keep in mind when you go to the gas station and you buy a lottery ticket, you kind of know you have a snowball's chance in hell of winning that thing. Putting on a butterfly at the 3,900 strike today would be exactly like buying a scratch lottery ticket at the gas station. You kind of know you got no chance in hell. But what if, right? It's a $5 lottery ticket. If it doesn't work, just shrug and move on and you don't care. It's like, well, it was a good try, whatever. Here we're looking at a 10-day, 30-minute chart. The volume profile is way over our head. And I understand with all the gravity points, that kind of gets lost. So let's adjust things here a little. All right, so there's the volume profile. The volume profile is in green. The time is in blue. It's TPO and volume profile. The point of control for both of those are significantly over our head. The size of the profile is nice and wide, but we are outside of it. When we find ourselves outside of the profile, the expectation is that we're going to go back into the profile. It's what we do. So when we're outside of it, we want to ask that question, are we moving back towards it or are we moving farther away from it? We can see that there's a shallow area. So if we were to break through, say, yesterday's levels, we don't have any volume resistance in our way. We should transverse through there pretty easy, all things considered. 3,900 does get us close to the bottom of the volume profile, and it does tie us into this volume sitting back here. Again, that would be a significant move. Eight out of 10 or 7 out of 10 stocks tend to do what the market is doing. So if we're looking at a range bound day in the S&P and in the NASDAQ, then we're very likely going to see a range bound day in everything else. It just kind of makes sense, right? So with that in mind, when you see setups today, temper your expectations. Take your profits. Yeah, get out while you can. Paper hands. And everything today is just all leading up to the FOMC. That's really it, right? That's really the crux of the entire thing. So most of the sectors are doing good today. We're a little weak in energy and Bitcoin. Something to think about when we do get through this FOMC, probably starting next week. And speaking of next week, Monday's a holiday. The market will be closed. And also on Monday, we're having a webinar from Options Omega. But starting next week, after this FOMC, you probably want to start looking for some new setups, right? Some new strategies, some new swings to take, especially if this gives us any kind of rally up off of these lows, right? We don't want to short from the hole. So once we've already fallen a significant way and you've closed out the run that you happen to have been in, you kind of got to sit around and wait for another shot, right? You got to get another reload. You can always do the contrarian run, catch a little bit on the backside of the pullback, but it still leaves you wanting and waiting, right? So here was an FOMC announcement. We had a nice little rally up, kind of stalled out, play it back down. Had an FOMC announcement, nice little rally up, ran it on down, right? FOMC announcement, 1 day bump to the upside and ran it down. And here we are today. So with that in mind, if we get that nice little bump to the upside, suppose it's like the March 15th FOMC and we actually get a sustained move more than 1 day, right? More than the one that we got in May, that 1 day rally, but more like what we got in March. If we do get a run like we got in March, where are we headed? 4,100, maybe 4,200. That would be like target one, target two, maybe 43 if it's crazy, crazy good stuff, right? Maybe 43. But we would all still be looking for that rollover, the next flip to take it to the downside, because we are by no means done with these lows, right? Ultimate target in the S&P is, I mean, I've seen levels from 28 to 31. You're basically throwing darts at a target board at that point. But I think everybody agrees that the low that we have right now is not the low, and we will be having a lower low. So from that point of view, any move to the upside, first target how far you think we're going to get, and then be thinking about, well, what am I going to roll over when we get there? What has not yet fallen the worst or the most? What is still up even a little bit on the year? When you do use that kind of language, what's up on the year? Be specific. Are you talking about year to date, starting from January 3, or are you talking about in a 12-month rolling period? Remember, the things that are up the most still have room to fall. Whereas if you target things like Meta, PayPal, Netflix, things that already have fallen significantly, it doesn't really leave much in the way of imagination to try to short something that is already at its lowest value on your 2-year chart or 5-year chart. Looking back at previous FOMCs can kind of give you an idea, a little bit of a heads up for what kind of move we should or could see today, right? And the two comparisons that are both in an upside direction would be the difference between March, where we had that sustained rally that lasted a few weeks, or the up day that we had in May that was literally just one single up day and then it rolled over and headed down. So in that upside play, be considering that. And remember, it doesn't need to go up. It can just as easily go down, right? Or we could have an FOMC meeting where we don't go anywhere like we had on January. They did the report, and for 2 days, nothing happened. And we got into Monday, and it had a little bit of move to the upside before it rolled over. So it could just be a dud where nothing, right? It's nothing. Remember, the market can always do three things. It can go up, it can go down, it can stay where it is. If Powell muddies the waters and does not present his message clearly and articulates well, we could just do nothing like we did in March. That's what I got for you guys. Be careful, be safe. I will see you all tomorrow.